Okay, hello everyone and welcome to this special meeting of the Hyperledger Trade Finance Special Interest Group. I'm Julian Gordon, I'm the VP for Asia Pacific for Hyperledger, and I'm delighted to open this event. We've had an excellent response to this webinar, and I'm looking forward to, I think, if you listened to the chat before, an excellent discussion on some of the important issues facing trade finance today. And I can think of no one better than this illustrious panel to discuss that. But before I go there, I would like to, before I hand it over to Graham and the panel, I'd just like to take a step back and talk a little bit about, come on, do as I say, talk a little bit about what Hyperledger Special Interest Group is. And this today is a special or an extraordinary session of the Trade Finance Special Interest Group. So as this quote here says, the aim of a Hyperledger Special Interest Group is to gather the community that works on a domain-specific opportunity, prominent and vertical, and in this case, we're looking at trade finance, and it aims to create an environment for open discussion, and we have bi-weekly meetings and events and activities, so you're very welcome to do that, and we do that today. It can also do, and I think this is something that we're discussing internally and externally with everybody, everyone is welcome, about creation of documents, and other interest groups have done that. And also solution proposals. You know, in the end, it can end up, and we have in other special interest groups, end in coding projects. So that is the remit. It's open to everyone, including Hyperledger members and the wider community. So everyone is very welcome. Here is some of the other, just to show you, it's not just trade finance. We have social impact, healthcare, which is very hot at the moment, supply chain, which is obviously relatively attached as well to trade finance, many different areas that you can get involved in. It's driven by volunteers. So we have a chair, Andrew Frossinini, who is here today. Who is an independent trade finance consultant. So he took that over from someone from the Bank of England and has been helping drive that. We also have vice chair, Atul. I think somebody turn the mute. Thank you. And then we also have Atul Patel, who is from our member DLT Ledgers, who is the vice chair. So I thank these two for driving this trade finance trade finance special interest group. So people are always asking me, how do you get involved? It's very easy. Basically, you go to our wiki, you join the mailing list. So that's a call to action. I'll put this list in the chat. So anyone who wants to get involved, is not already involved, please sign up to our mailing list. We also have a Rocket chat, so please connect to that. And you can just get on our mailing list, you can communicate with anybody here, and you can propose a topic and present at any meeting. And if you want to do a co-write a paper or whatever you want to do, please just approach us. Everyone is welcome. We also have a volunteer, Ross Wilkinson, who works at Bolero. He has taken the volunteer role of helping pull together the community. So he's a great person, and me and anybody in the special interest group are great people if you want to know more about how to get involved. But that is a call to action. Now I'm going to hand over to Guilhem Vincent, who is the head of Change Innovation at APAC at ABN AMRO. Who has been involved, actually, I think, Guilhem, you're one of the first people we talked about the trade finance. He is, ABN AMRO is a Hyperledger member, and he's very much an expert in this space, and I'm very excited that he's here today to take and run this panel. Guilhem, I'll pass it over to you now. Thank you.
Thanks, Julian. Thanks for the introduction, and thanks for having me. Indeed, I work for ABN AMRO, Dutch bank in retail and private and corporate banking, and I'm running innovation in Asia Pacific, meaning fostering innovation and implementing executing the digital strategy. So I've been working on digital platform for trade finance in the last few years. We have a great panel today, indeed. I'm going to ask you, Palm, Atul, and Mark to introduce yourself. Palm?
Yes, good morning, Guillermo, and good afternoon, good evening. Thank you for inviting us to this panel discussion. So my name is Palm Sanger, and I am the global blockchain leader with IBM, focusing on trade and trade finance networks.
Thank you. Atul?
Yes, good afternoon, everyone, and pleasure to be here along with such a good representative audience. So I work with DLT Ledger. We work towards digital trade and trade execution journey. So it's my pleasure to be here along with my esteemed fellow panelists.
Thank you, Atul. Mark?
Hi, Guillaume. My name is Mark Gooden. I am the CTO of we.trade. We deliver a secure digital platform for our trading partners, banks, and their customers.
Lovely, thank you. So let's go straight into the topic. So I'm going to start with you, Palm. Starting with the current situation, obviously we're in the middle of this COVID-19. So we saw velocity of digital project in corporates and financial institutions. But at the same time, we saw a series of fraud scandals, which get the bank to adopt a de-risking approach and reducing exposure. So even the ICC indicating that the trade gap widened from 1.5 trillion USD to close to 5 trillion. So it's quite massive. What do you experience with your client? What is your take on the current situation of trade finance and platforms?
Yeah, no, thank you, Guillaume. I'd say, first of all, I mean, a word that's been overused, and quite rightly so, is the word unprecedented. And we are in unprecedented times with COVID-19. And I'd certainly say for everybody who's out there listening and watching, obviously be careful, be safe, because this virus is taking absolutely no prisoners. And as a result of that, we are facing what we believe to be great and grave economic uncertainty. As a result, as you just mentioned, the 5 trillion trade finance gap, but generally around the world, GDP growth has hit 2 consecutive quarters of negative growth. So when we, as IBM, and in our conversations with our clients worldwide, when we're looking at trade finance, we are really seeing conversations happening in what's happening in the world of trade first, and then the implications. So just at the highest level, trade finance is not easy. And it is a process that is very process, capital, and information intensive. But the world in which it operates with regards to global trade is even more complex. And COVID, we found, has really exacerbated situations and shone a very bright light on some of the stresses and strains that were supposedly being addressed, but aren't really. And the outcome is that although digitization is happening, it's not happening fast enough. But what COVID has certainly highlighted is that digitization is just one element. But digitization with trust is now the key feature, because we still have containers and goods in the supply chain stuck in port authorities, in ports, with customs authorities, paperwork being held up. Because even though everybody's in pursuit of global growth and have been trying to digitize, so for example, with the Trade Facilitation Agreement of 2017, it really was to get the cost of trading down. And that was to complement what governments and the political systems were trying to do with regards to quotas and tariffs. And as we know now, we are in very uncertain times with regards to China, US, Europe, UK. So more instability, yet still initiatives to drive change, to get more consistency in the way that we handle trade, and then into which we offer trade financing. But that's been complicated even further with legal situations. And as we've seen with the ICC, even though Mr. Denton was quoting 5 trillion as a trade finance gap, the ICC has also been very active in how do we actually look at the legal situations of paperwork that goes through the supply chain when looking at financing, and how do we manage the situations of documents which are being managed as we go from the UCP 600 to the EUCP sort of flow. So lots of complications from a political, lots of complications from an economical and a legal point of view. And technology with digitization to help those workflows digitize, as I said earlier, is happening, but is happening not enough. And COVID has certainly shown that because of the lockdown, no people in the process, manufacturing slowing down. So the whole supply chain is drying up and also then compounding and leading to that trade finance gap. So what we're finding here is that we're seeing two major shifts with governments, regulators, companies in the supply chain, as well as the banks within the workflow, is how do we accelerate our digital and digitization efforts, and how do we make that workflow of the information being shared a lot more cheaper, faster, but at the same time, and this is where it's been very interesting from a trade finance SIG point of view, and what we're doing with blockchain, is people have realized is if you digitize a loan, it's not enough. The movement of the trusted data has to happen as well. So it's no longer just, shall I PDF a document, but how do I make sure that the PDF source is trusted and that it's moved in a trusted way throughout the workflow to the other part of the process in the supply chain. So we're seeing major shifts with our clients who are re-looking at their investments of digitization, but are now bringing in the trust and transparent movement of that data, which traditional data repositories really can't do as efficiently as blockchain. So that's a sort of trend we're seeing, Guilherme, at a global level, and a lot of conversations from banks and the supply chain participants looking for governments and industry bodies for more guidance.
Thank you, Pan, for this good overview. So now I'd like to move indeed to the core of the topic is, and the question is for you at all, is if the trade book of a bank decreased by 30%, which is probably the case at the moment, how do you think the blockchain platform can help? And what are the business model innovation ideas that can be brought on the table?
Well, yeah, absolutely. That's pretty interesting question, and I would just offer my observations, and I think just what I think is happening and how technology can have a business outcome which is needed in this world, in the post-COVID world or a new normal world for us to survive, right? So I think fundamentally one has to look at the competition that existed with multiple different banks out there. And always they have been serving the top of the pyramid, right? So they've always been serving the good, large corporate customers. And always, in my experience over the last 3 years, whenever I met a large corporate customers, he has 80 banks or 100 banks or 120 banks, and it doesn't matter to him. But then as I come down the pyramid, go to upper mid-market sort of customers, it kind of drops down to about maybe 5 to 7 banks. And then I really look at the people who are in the mid-market, really nobody out there, right, to fund. So I think the banks have traditionally taken an approach, hey, it is a low-risk business, it's documented trade, let me just make money where I can, right? And then they just really didn't pay a lot of attention to this area. So I think there is an opportunity, two ways to look at it. We sit here in Singapore. Singapore, is obviously at the, one of the key centers of the trade hub. So what is that we could do as people who sit in Singapore? What is the think tank in Singapore is thinking about? So there are two ways to look at. They are saying, look, can I actually deepen my ties of the trade? And like what Pam mentioned, create in terms of the regional bubbles or trade bubbles. Can the trade bubbles be created where I actually can do an end-to-end insulation with digital across small, medium, and large, right? An example country could be like between say, Singapore and New Zealand. If everything that you do between Singapore and New Zealand can be digitally insulated through the digital trade, then obviously, it kind of provides a level playing field to those countries level playing fields to those customers for an access to the fund. So I think the banks, how they look at this technology, the private permission technology, which allows them with a trust, how can they come out with a new business model? I think it is, you need to dissect that into a classic documentary trade world, and then in the open account world, right? What can you do in the open account world, which potentially now allows you to have a newer offerings of maybe some kind of supplier financing or deep tier financing that you have not thought about it before, come out with something which is now possible for you to implement in a matter of few days or weeks, as opposed to, doing about 18 months to build a product. I know we have a lot of esteemed trade product colleagues in the audience. I remember a great story when I met with a large palm oil company in Malaysia, and they were telling me a large international bank came and told them that I'm going to build a transshipment product for you, and it took them about 12 months to build that product, right? So gone are the days when you take 12 months to build a product, because in 12 months the company may not exist, or they may need to pivot to different way of looking at it. So the agility is a key. So what the new business model innovation ideas could be, can I actually go to a newer sectors of the markets in a lowest possible time with a very secure approach of managing my credit risk. And that's where I think the blockchain adds value. So it's about really, there is a story around reducing cost, but can I actually increase my top line? And I do believe that banks who actually look at this technology as a BMI, they would be able to survive and increase their trade books even in this difficult time.
Yes, you're very right. I mean, the potential, I think, is known. People tend to forget the top line and focus more on improving business process, providing a transaction transparency, security of the value chain, reducing the operation cost. So I think this is quite obvious. But Mark, why do you think? I'm interested in scale up and mass adoption. How come there is no mass adoption so far? What has been holding blockchain to scale up today?
Thanks, Kim. Interesting question. What has been holding blockchain? I guess, there are a number of different factors. I mean, we all know that trade finance has been around and trade has been around for, hundreds of years. And now we've this new technology, or relatively new technology at this stage, so at what, 3-4 years old, well, about 3 years old for most of us, where we started with, introducing blockchain technologies to different domains. And in our domain is trade finance. And, in a lot of cases, the banks are still operating in heavily regulated industries. So to bring in a new technology and to have the adoption of that technology at a mass scale, it doesn't happen overnight. You also have a certain risk appetite for banks. There are certain banks and they have a higher, or certain customers, when it comes to new technologies, they have a higher appetite for risk, a higher threshold for risk, or even that they're able to mobilize teams to be able to learn and take up a new technology at different rates. You're going to have banks and organizations, governments, and they're going to adopt technologies at different speeds. They're also going to move at different speeds. You'll have some of them and they'll move at the speed of a locomotive, and others who will move at the speed of a scooter. And in a blockchain, and when you're trying to build up a network, you'll hear this term, we're waiting, the network effect. When the network gets dense enough for a lot of the participants to actually gravitate towards that network. And in some cases, that takes a while to build up. We've been doing documentary trade for for a long time, and there are a lot of issues with documentary trade. I mean, if on the documentary credit, I mean, you have issues about whether the credit has expired, whether there's late presentation of documents, or if it doesn't comply with the contract terms. On the bill of exchange, you've got whether it's drawn down in different currencies, whether tenor of the bill is different, and it doesn't match with the LC. So there's in documentary trade, there are a lot of issues there today, and we're trying to, for a lot of the products that are actually operating in the trade finance area, they're trying to overcome a lot of the problems that are there today with documentary trade. But also in the case, and just echoing on to Atul's point of view, we're also trying to come up with a new business model for the banks or for our customers. So effectively, I mean, where we started with we.trade has been more in the case of open account for SMEs. Now, where the banks were really not there today. I mean, their customers may have been trading. It was a very high risk area or a higher risk area for them to trade. So we saw it as a sweet spot for us to say, okay, this is an opportunity where we can bring about a digital, more trusted trade experience. We can allow the banks to offer new products to their customers. So, echoing Atul's point, allowing them to, positively impact their top line. In some cases, and we have evidence, even on with we.trade, where some banks have been able to acquire new customers by leveraging we.trade because their customers were actually asking them to, we want to trade on we.trade because it's more secure. In terms of mass, really kind of getting that, that density, banks are still, there are certain banks and they're still waiting. They're waiting to see which network is going to win, which product is going to be the one that kind of, overcomes all of them. I think we all on our panel here and even, on our working group, we've discussed it quite a number of times. We believe there will not be one network to rule them all. We believe that interoperability will be the way in which all of these ecosystems will grow and learn and kind of interoperate with one another. And we do see, as Atul said, that there will be pockets in different areas of the world, whether it's a we.trade in Europe or a we.trade in Africa or elsewhere, or even DLT Ledgers in Singapore. So we do know that there will be pockets of these networks, all disparate around the world, and we're going to have to work on connectivity and interoperability between these networks. But I think there's, if anything, I think COVID is actually helping and will continue to accelerate the digital adoption of blockchain networks because of all of the issues with documentary trade that's actually ever present today. With the issues that we overcome through, bringing about, a digital, secure trading experience. I think the banks or certain, companies who are not adopting blockchain technology specifically in our area, I think they're missing out on an opportunity. I think that they are, I think they're at risk of actually not, not bringing something to their customers that their customers are actually need. So they're at a risk of actually not fulfilling what their customers are requiring them. And I think, for those who actually adopt their technologies, they are putting themselves out front and center at the forefront of innovation, at the forefront of change. And, companies are looking at that, and I think that they can possibly, and we believe that they can possibly grow their top line by attracting new customers because they're able to offer customers a trusted trading experience in a global network or in global networks that can communicate with one another.
Thank you, Mark. I think there are very relevant points that you have raised, and actually I'd like to split them in several categories. Maybe for you, Palm, how do you address that with your client or prospect that indicate that they're worried about using digital documents because they don't know if it has the same value in court. They are struggling with compliance. They're not willing to put client-sensitive information outside the network, or simply that they're struggling to have to connect to those platforms, because it entails that you have structured data and hopefully proper API for it. So yeah, how do you address that as a platform with your value proposition, basically?
Yeah, I think Guillem, I think we.trade is a classic example of how do you tackle these challenges. Is as we mentioned before, the digitization. Oh, so we.trade is a platform, as Mark said, which is a cloud-based service, and within it has blockchain, and the blockchain is being used to provide the codification of the terms of the contract between the buyer and the seller, and it provides a trusted, low-risk environment that via the banks onboarding those SMEs onto the platform by which to find each other and then execute trade. Real life example, when we were working, and as we are now, as we collaborated with we.trade, we had a situation of 7 banks at the time, and this was back in 2017, 2018, where each bank had its own trade finance workflows. And then it had to integrate those workflows with a brand new platform, which they co-invested and created, called we.trade. And then how can they, as a bank in a heavily regulated industry, connect in a compliant way, conduct trades which respected all the data privacy and the data sovereignty and the regulatory requirements on the movement of that private data in a cloud environment, which is then always available and compliant to the disaster recovery and the business continuity requirements that the banks have. So the functional requirement of an application was relatively easy. The non-functional, as you've highlighted, Mark, was the challenge. And as you say, Guillem, how do we manage this? And how do you then deploy within regulated industries was the real challenge. And I'd say 70% of the effort, not the application, not the platform and the service from which to get greater value, but how do you actually deploy in regulated industries? And that's where, again, from an IBM perspective, from our legacy and pedigree of operating many of the bank's systems in mission critical environments, non-functional business continuity, disaster recovery, security. How do you design those controls? And then how do you then align those with the private permissioned access that Hyperledger gives you as an approach by which then to get the value of blockchain to have lower cost and lower risk and high levels of trust in a production environment. And yeah, working with regulators in informing them as to what kind of service is coming through to get their input and advice was key. The banks having those conversations with their internal control functions as to what service they were looking to connect to and what service would be onboarded was also very important in the whole journey to actually deploy a platform in heavily regulated industries. So by working together with regulators, the banks, the internal control functions, the risk officers, the data security officers, et cetera, together then with the actual requirements of the SMEs, we managed to navigate what was best practice in ensuring that we could actually put forward a service that could then operate mission critical environments. So that was all the sort of learnings that we had and how to overcome some of those challenges. Because, you know, back in 2016, 90% of our conversations with blockchain were with financial services institutions. And 90% of those conversations were first learning and understanding what is blockchain, but then the rest was all about, well, how do I now deploy it and take advantage not only of the operational savings, but also how to then establish new business models in a much more of a trusted ecosystem with a network talking to another network and exchanging data in a much more of a trusted environment in a manner. So that's how we worked with we.trade to take now, I think it's now 15 banks in Europe and about 18, 19 countries, I think it is, Mark, isn't it?
That's correct, Parm. Yeah. I mean, there was a lot of involvement, you know, with local and Guillem, just to echo what Parm said. There was a lot of involvement in terms of, you know, the obviously everybody knows that we've got a rule book, and we've had one from the day we went live, for example, over 2 years, nearly 2 years now. It's a case of, so we've had to work with, local regulators of each of the banks. So in certain cases, like, some of the banks actually had to go and actually nearly had to get their local regulator to endorse what we were doing on the platform to make sure that they could actually operate on the platform. Now, so in Europe, obviously, I mean, we've got 27 member states. So there are banks that usually, they were bringing their local regulator on board, at every step during the way. Parm actually mentions as well, like, that we had, we actually had, at one stage, we had about, a legal team from each of the legal representative from each of the member banks, who were then obviously then taking this back into their banks and actually engaging them with the local regulator. So to bring about new technology in a heavily regulated industry, it's not just a case of, okay, it's all just functional development and we're ready to go. There were a lot of, compliance, legal, risk, security, all of these concerns had to be met. And then in Europe, I mean, and we've got some extra, like I would say, the cherry on the top. I mean, we've got extra things like GDPR as well. So it's not even just the financial regulation requirements. We also have even, topics to address, such as GDPR, and we were at the fore of doing that. And there were, each, from what we actually understood, each and every country interprets GDPR with their own flavor. So just to give you an example, there are some countries and they would consider SME data to consider to be personal data, and then there are other countries where their regulator consider trader data or company data to be non-personal. So we needed to make sure that our system could be compliant and could operate in all of the different markets that we have within Europe. And as you can imagine, it's like, in certain cases it was, specific requirements for example, maybe for Belgium or for Italy or for Germany or, up in Finland, in all of, in all of the countries where we operate, we've had to make sure that we actually are compliant with each and every one of those countries, local regulator, as well as at the European level.
Thank you both. I saw in the chat a question related to that. How much banks are convinced about security aspects of permission blockchain capabilities? My view is that on security on permission blockchain, that's not such a problem, because it's mainly education, so that's okay. I think the point that were raised earlier by Mark on the legal and compliance part is much more difficult than the security. Do you experience something different, Mark or Palm?
No, you're absolutely right. I mean, in terms of, like, we've worked a lot with the banks in terms of, as Parm said earlier, we worked a lot with the banks to, shall we say, educate them in a sense on what is blockchain, what is a permission blockchain, where, when we talked about, and we won't talk technical here, but when we talked about, the peers, the orders, what information is being stored where, when either in the older days of Fabric, when we had the channels architecture, and now we go to the PDC model with the private data collections. So we were having, so that's all about how is my data, or how is my customer's data securitized? Who's got access to it? What controls, what mitigations are you putting in place for accessing the data? Who can access the data? These are what we would consider, obviously the non-functional requirements, and we've actually had to educate, I would say, and bring the banks a lot, along on their journey, including even new banks that we're currently talking to. Again, we're educating them a lot on what is blockchain, what is permission blockchain. A lot, and as Parm has already alluded to, I'd say about 70% of the work that we have had to do with we.trade has really been in at that, at that higher level, at that regulatory level, at that, working with legal, compliance, and regulators. That's where effectively now, we started with 7, we expanded to 7 to 12, and now up to 15. I think we'll have another 2 gone live within the next month or so. So, I mean, we're growing now, but the journey to onboard newer banks is easier because we've amassed all of the documentation. We can already predict what questions we're going to be asked. So we already have a set of documentation, a set of presentations that we can already bring new participants onto. And when they already see that we have got these regulatory sign-offs, or that we're operating live in in these countries, then I think it eases their mind, or their concerns are kind of more easily addressed. But a lot of it is really just down at, there's a fine balance between trying to bring a product where you have to deliver value-added services to customers and the traders, and also been operating in the very heavily regulated industry. So we had tried to bring we.trade, but very much on a balance, focusing on many different topics at first. And this is one of the reasons why we kind of focused on our product. We focused in a kind of with a narrow, kind of more focused area, so that we could deliver that value, but also work very diligently in that legal and compliance area. So I think the journey now to onboard banks and to onboard newer banks is very much easier because we've done a lot of the grunt work before.
Thanks, Mark.
I was going to say, and then just to quickly add to a little bit of that, I think the question about the security of permission blockchain is one element. And regulators, by the way, have been great in participating. That many of them around the world have sandboxes where they're now learning and applying the technology themselves, because it's all about the design and the efficiencies of the risk controls when you're looking at security. But the complication is not on blockchain, where, as you said, education has been primary focus. It's how then do you take the workflow, which is an application. Typically, then it will need to connect to other systems and companies outside of its four walls, which means via some sort of cloud. And then within that, there is the blockchain element. When you get those elements coming together, and that alignment is where the complication is. And that's the hard work that's been done when then looking at the efficiencies of a control, when looking at security and the movement of that data. It's not the individual levels, it's how all of those levels actually come together.
Yeah, that's a fair point, Pan. To remain on blockchain, I'd like to rebound on what Mark has mentioned earlier. You mentioned interoperability. At all, what we see is that there is a focus on chain interoperability across public blockchain, with development of sidechains, notary schemes, time hash locks. And we see plenty of players, Chainlink, Cosmos, Hybrix, OneChain, and so on. But for permission, how to bridge blockchain? Or is it really a way to go? Because I have this question very often on the interoperability. Is the solution having a third blockchain sitting in the middle of two blockchains, or is it also a problem of governance, data ownership, and commercial business models?
Yeah, no, that's a great question. So if I could, it's also relates back to the journey that DLT Ledger had about 3 years in the making, and we actually took a slightly different path. But if you look at the adoption that we had, it's testimony to the fact that you focus on the customer first, right? So the journey of what we do in the trade execution is also identifying who is actually the person who is actually taking the risk in a trade. So in a cross-border trade scenario, it is fundamentally a customer or a trader or a corporate, whatever you want to call it. He takes that risk, and banks look at him, look at his documents, look at his collateral, and extend the money. And then same thing happens to the counterparties, right? So, the approach that you take is always dependent on where the business is. At the end of the day, the technology is only as good as what the business guys is going to use it for. So, and fundamentally, when we look at the trade execution and trade finance, we are looking at people who are just not that happy or that high up in terms of understanding the technology, right? So the success that we had till date has been always focusing around where customer is focusing their energy into. And, you and I had these conversations over the years as well. If it's a customer who is asking us to use a particular platform or a system, your compliance or risk would have no issues about it, because it is a customer specific journey. You have X and Y book against them, and therefore you would go ahead and do that, right? So and that's where we got now 45 banks into the platform, over 2,800 counterparties doing a $3 billion trade annually, and I think it gets added about 400 to 500 million every month, right? And that across the areas, in Middle East, Africa, Southeast Asia, and it actually perfectly complements the strength that we.trade has, which is in Europe, where we don't really do much, right? So so my view of the world in the interoperability is really looking at understanding first of all where the adoption is, where the business is, and there are already, like it or not, there are already networks which exist well before the arrival of distributed ledgers technology, or blockchain as you call it. And those networks exist in people's mind. When people visited, they called up 20 people in Dubai, because those are the people that they do business with. If you visited Vietnam, you called up 5 people, and you told also your other colleague who could be a competitor that these 3 you don't do business with. And that is how the trade has happened, right? So now the network already existed. Could I actually go and digitize those networks where I have some degree of influence, i.e. the corporate and the counterparties, and then talk about, linking the bank-to-bank work. That's where a lot of other blockchain consortiums have been focused around, and we have specifically stayed away from that, because that's between the banks to communicate amongst them, whether should I replace SWIFT or come out with something new. And that is a different domain, but that's not the domain where you see the business is actually asking for. So the interoperability is a function of adoption. So in my world, in my book, it is how you're going to get the adoption going, right? And Bolero has been around for 30 years, but Rosewood is the first one to admit that it's like the adoption of electronic BL is only 0.07%. Why is that? It's not that technology is bad in Bolero; it's an excellent tech, but it's just that it's the people who use it in the shipping industry, in the trade companies, apart from the banks and apart from the tech guys like us, are just not, aware about what to do, and they have not been told what to do. So it is more about a governance and adoption issue. So it is, in some ways, I'm provocative to suggest that interoperability is not a question, because nobody has come and told me the volumes which requires interoperability. Right? Because even today, in the best of the cases, the customers we have 410 customers. Some customers do about 70% of their trade flows. They still do 30% manually because of whatever reason that they still want to do, right? Some customers are small, they do everything. So it is about the adoption. So as an industry, as this esteemed forum, can we actually have a tipping point to say 10% of the world's trade should be on digital platform? And therefore, if it goes about 10, talk about interoperability. If it is less than 1%, why do I talk about interoperability? Maybe an answer, a question back to you, Gio, because, you talk about interoperability, but where do you see how much % of your trade will go digital? And then
the way I see that tool is that I think the question is there on interoperability, but I think the ball is in the court of the bank first, in being able that, as long as we recognize that we own less and less the relationship with the client, and we are more and more dependent on different ecosystems and platforms, we need to be agile enough to connect to different platforms.
Right.
So it's not going to solve the interoperability issue, but it will move it away for one, because what we need as financial institution is to have our data structured enough, and having our legacy system being modernized, so we can have APIs, so we can connect to different platforms in an easy way. At the moment, I think it's too much, okay, we are in this and this platform, so we're not looking at the others. And I think it's a matter of investment, because indeed it's too much work to connect to those platforms. So banks want but they basically want volumes. But if you're agile enough, you're able to do plug and play on different platforms. That's my
yeah,
opinion.
no, you're right. So so we call ourselves to be C2B platform, right? Customer or corporate to bank, right? And when you do that, you obviously solve multiple problems, because the customer may have multiple banks, and you kind of all of a sudden work together because there's a business outcome one is achieving. Answering, in terms of the technology, what you could do to, interoperate, right? So, I mean, obviously, there are frameworks, right? You have a Hyperledger framework, you have, Coda frameworks, you have Quorum, you have Ethereum's, and, there are a few others out there in terms of, the different incarnation of chains. And then how do I actually work together? Conversations are happening between myself and Mark, that how do I interoperate, for example, between we.trade and DLT Ledgers. Now, technically, not an issue at all to interoperate, right? It is a governance issue then, right? So if there is a business partner in we.trade and there is a business partner in DLT Ledgers, right? How would you then basically, because it's private permission networks, how do you actually allow those handshake to happen, that business partner is available now to do a transact business with the DLT Ledgers network? And similar explorations can be done in terms of, from a business point of view. How do you allow that? Now, our philosophy in that is that it's a business decision, right? So if I am talking to a business partner in Vietnam, and that business partner is talking to someone in Europe to do something, and and that party is in we.trade and the party in Vietnam is in DLT Ledger, then it is basically the business, both the business rules, business partners should say, okay, now I'm going to open this up to be a global business partner or a shared business partner, and it should work. So it's more of a governance conversation at that point. And then they should feel comfortable to do so, because, again, it is about the comfort, the trust that the network brings, but there's also, I think its onus should be on the participants, not the technology provider, to select whether to interoperate or not to interoperate, right? Technical interoperability is already done, in my opinion, right? It is done, it's sorted. But yeah,
Guillaume, sorry, Guillaume, I would ask the question here. I mean, because when we talk about interoperability, I mean, I'd like to understand what do you mean by interoperability? Do you mean the interoperability of your bank to a network such as DLT Ledgers or such as we.trade, for example? Because I think most of us, and maybe Atul can also confirm, already, on our products today, we offer interoperability between, with the bank systems.
Right.
Yes, and banks are running legacy systems, maybe legacy payment rails or other legacy systems. But this level of interoperability we have already done, and
I mean, Mark, you understood interoperability correctly. It's interoperability between the different platforms.
Yeah.
So that we.trade can talk indeed to DLT Ledger, that can talk to Contour, that can talk to Congo.
Yeah, exactly. And look, we have done an interoperability before. We actually down in APAC actually we did that interoperability with E-Trade Connect down in Hong Kong. And so we did this. We connected to two different networks, and we had a different ways in which we were doing it. We were either going to do it at the application level, and at the application level, okay, what can you do? What controls, what mitigations do you need to have in place? Do you have an agent in between, and is that agent blockchain enabled to make sure that the messages that are passed between from one network to the other again are immutable, are trusted, and all of these? Do you do it down at the smart contract level? So we've investigated many different approaches in terms of how we actually go about interoperability. I think when we successfully completed that POC, yes, we did it at a higher level with controls in place. But we also, it also gives us a good lot of learning in terms of, okay, what's missing? So we knew we could do it at a technical level from the POC, and then we drew up a list. Okay, in terms of if we, when we come along and further evolve this interoperability, what are the concerns that we needed to address? And again, the concerns came back down to the similar piece. Where is the information? Who needs to store what information where? Who's got it? Do we have data sovereignty issues that we need to comply with? Again, on the governance, if one platform evolves at a different rate to another platform's evolution, how do you make sure then that interoperability or that interconnectivity is still maintained, number one, but also is still operating under the rules of the initial integration? So a lot of these questions need to be discussed when you're discussing interoperability. And then also we need to actually have a look at, to make interoperability easier, we need to have a look at standards. Standards are, because we're all very new in the industry today in terms of the standards that we apply. But and we've been building up our networks, in our areas or in our bubbles, as that was said earlier on. But now it's a kind of making sure, okay, what new standards may need to be created for us to be able to talk network to network, and at which level does those standards need to be applied? At the application level, or at the actual smart contract level, or even down lower, you know what I mean? So these are some of the things that I think need to be fleshed out.
Yeah, there's one word that come out, I think, of what Dean just said, is collaboration. So a question for you, Pam. So we see that there is a lot of we see that digital platforms that address some part of the supply chain. Some address the initiation of the trade, like a marketplace, some the post-settlement, some the vessel on the inspection, some the financing part. And both you, Atul, and Mark, you mentioned a number of initiatives where you have been talking to different parties. What do you think? Do we have enough level of collaboration, or are you suggesting a different way of collaboration among platform, corporates, banks, and other stakeholders, warehouses, ports, regulators? Do you have any view on this?
Yeah, no, we do actually, Guillem, and it's pretty much captured in a study that we released about 5 weeks ago of 1,000 companies, 22 industries, and about 34 countries, which was what's happening with trade finance and with blockchain generally. And the theme that was driving it was banks as well as companies involved in the supply chain were saying, I know digitization is happening to get my costs down to then try and boost more trade, and let's equate that to GDP growth. However, we also know that there is a plethora of activities happening within blockchain as well as in trade digitization. I mean, just blockchain, it's like $12 billion invested, 1,800 different companies suddenly sprouting out. One is talking about digital identities, other one's talking crypto, wallets, supply chain visibility, provenance. So there's a massive sort of spaghetti of confusion for industry participants, whether you're a bank or in the supply chain as a manufacturer. And what we're also hearing very loud and clear is that people are scared to make decisions because they don't know if they're going to make the right decision. And how then do they know that if they make a decision, it will work with another one? Because our study did show that in 3 years' time, more than 85% of companies will be using at least 3 different types of blockchain technology, partly in the absence of standards, but the method of standardization has to begin somewhere. And that's where we're now finding that companies are beginning to realize that blockchain not only gives me a lower cost, but actually it gives me the new upside to stand up and stand down new business ecosystems with new business partners to create new business and revenue opportunities. But how do we actually come together? Because as you said at the very beginning, it's all about the sharing of the data. And the study also showed us that more than 85% want to share data to collaborate more efficiently, but less than 50% trust each other in the sharing of that data. So if we take the world trade environment that I highlighted earlier from a political, economic, technology, citizen, environmental, legal point of view, is if we just digitize it, is that it? Is that going to solve the problem? And what we're hearing from industry bodies like the ICC, as well as the responses to the study, is that people are saying we've got to do things different. The collaboration now has to happen differently. Otherwise, we're just going to accelerate the current inefficiencies. Because as I said earlier, digitization is happening, but it's not happening fast enough. But then it has to happen with better trust and mutual benefits, with natural incentives to share data in the workflow, in and outside of my company, in the supply chain. So all of these vertical industry platforms that have arisen, like we.trade, like DLT, like Contour, like Marco Polo, Congo, Vuct, all of those platform plays which have come together to solve specific slices of the workflow problem with that small subset of the ecosystem. We're seeing that those subsets now have to work together in a much smarter way. We've touched upon interoperability, but as Mark said, it's whether it's the app layer or the cloud layer, that's done. It really is now, how do we now really want it in the absence of standards? So one Ethereum network transaction can intelligently and securely, in a trusted way, talk to a Hyperledger, to talk to an R3 Corda sort of transaction. So we're seeing that more collaboration is being demanded now by industry. More collaboration and guidance is being demanded from our study that we saw from government and regulators to provide some guide rails. And therefore, the technology providers have to work smarter together. And that's where we're now seeing that there's methods of interconnecting and interoperability. That's one path for better collaboration. But let's not overcomplicate it. But then the other thing that we're seeing actually, Gilliam, is collaboration where companies and platforms actually can convene and connect in a neutral marketplace. We see this notion of a neutral venue where there's a natural incentive to join, where the governance and the rule book, as Mark and Atul mentioned earlier, is open. The governance is open. The framework by which networks will talk to each other is open in the absence of standards, so that anybody's investments that have been made actually are protected because they will interoperate. At what level is then down to the type of data and respecting data sovereignty. So we're seeing a lot of movements now, Guillem, in a different type of collaboration, because people have realized you can't do it the way we're doing it now, because it doesn't solve then that container stuck in a port, because the paper document stamp is still required in the apps, even though you've now got it in a PDF format, and that trusted movement of that data needs to happen. So how do you share that data? Where do you share that data? And how do you collaborate in a different way? A lot of the conversations we're having now in Hong Kong, in Singapore, in China, in Europe, in the Africas, where governments and regulators are saying, how do we do this differently? It's interesting to see how many country platform conversations we're having, as well as trade finance platforms interoperating with the rest of the supply chain, or with provenance of providers, or with digital identity, or with digital ID platforms coming together. So it's a moving space, but certainly we now get a better feel as to where people want to go, people being companies in trade and trade finance, to operate in a different way, because we've got to digitize with trust now, not just digitize alone.
Yeah, just to add that, I would rather spend our time to focus on what's in the container once the paper is sorted by firm, and figure that out with trust. That is it a cashew nut getting across, or is it something else getting across, and what is in the container is what it is, and that's where also, you know, the business problem can drive the adoption. So I think it is about adoption. I'm a very strong proponent of adoption, and until the adoption is not there, we could, cows come home, we could be talking about interoperability for the next 5 years.
Yeah, thank you, Atul and Pam. And Pam, I thought he did resonate well with what Julian was saying in the beginning, calling for collaboration. So I see that we already spent an hour on it, so so we'll have to leave it there. Is there any final words and wrap up that any of you want to say?
Well, no, I think I wanted also to take questions, Guillaume, because there have been quite a few good questions that we could spend time on. But I think I just wanted to feel and share on top of what Perm says. It is at the end of the day, if you look at the world that we are in now, specifically in Singapore, which I see, and it's really drying up the liquidity in the market, right? Because I think fundamentally the banks hold the key to the finance, and banks are getting increasingly jittery because of whatever reasons. Maybe they also want to only lend to people whom they want to reduce their risk because of disruption that had happened to the physical supply chain that we are all very well across to, but the financial supply chains are also broken, right? So if that's the case, and if the trade is not looking, the physical trade happens, but there is nobody to fund to this guys. I think that is really where I see. I think the banks like you, or you are a bank representative in this call. You need to step up to the guests and say, how are you actually going to support this, or how are you going to take advantage of this other banks not funding a particular trader, and can I actually use the technology to kind of purify this trader and fund that trader, and therefore I increase my trade book. I guess that's really the last point from my side of the house, because by shutting the door to a trader who comes up genuinely for a finance is not an option, which I think a lot of banks are doing today. That, okay, I'm not going to finance it because I got legals and I got compliance and a lot of people asking a lot of questions. I would rather just continue to finance Cargill and Glencore of the world, and I'll sit there. But is there a thought process, or is there a way for you to win that over from a bank point of view, beyond maybe the last thing that you could contribute and provide us with your insight?
It's a tough question. Huh? It's a tough question, because I think it's more a question for business side. But I agree with you. I think the technology provide a way now to do much more financing and much more asset rotation, because there is also innovation on the side of selling your loan portfolio as well. There is much more new marketplaces and better matchmaking. So the same way, I think with this new platform, using digital platform, we can respond to a much bigger business. And that's why you mentioned at the very beginning that it's addressing top line. I think you spot on. And it's much more exciting as well. Just rather than saying blockchain will make operation cost savings, it's much more exciting to talk about top line. All right. Thank you. Is it back to you, Julian?
Yes, it can be.
So thank you all. Thank you, the panelists.
Yes, Julian, there are a lot of questions. Do you want to just take those questions, or how do we?
Yes, we can do this. I mean, this is a free format. Yeah, why don't you? What happens to us always is around the 60th minute, we suddenly have lots of questions we want to answer, right? So you have freedom. Go ahead. So we can end the official kind of thing, but please, have a go at answering those questions. Everyone, they can stay on. We do have another 20 minutes or so that we could go through those questions if you want at all. You're the vice chair.
No, I'm also respectful of everyone's time. So I think, is there a particular question, Pam or Mark, that you wanted to pick up and answer or elaborate?
Just scanning them now very quickly.
Yeah. So I think Joel had some things in there as well, right? Or what we could do is maybe next week, in 2 weeks' time, we answer those questions.
Yeah, I think there is an interesting question, Julian, about how is blockchain helping bringing closer physical and financial supply chain? So that's a fantastic question. Yeah, I mean, it is to the point that I talked about, right? I mean, it is the financial supply chain needs to be thought about with the people who has the money or who have collaterals which are worth the money, right? So I think, the banks and the alternative finance institution comes there, right? I mean, I always, there was a McKinsey report which says that 40% of the bank create value, 60% of the banks actually destroys value, right? Today in the world, and it's quite a large ratio, staggering ratios that only 40% of the 10,000 odd banks in the world actually creates value and 60% destroy, right? So I think if you look at the financial supply chain aspect of it, and this is where I see huge amount of innovation happening in Asia, where people have come up with this big alternative financing, kind of funds. Obviously, the cost of fund and at the rate at which they lend to the trader is high. But I think with the help of the technology, if the technology like us or any of the fellow colleagues, they can actually reduce the cost of doing the checks and cost of aligning those paperwork. I think the cost could come down for lending, and then alternative finance providers could very well be a threat to the banks, yeah, which currently are not. But I think that's where I think probably an answer to that question on my side of the house.
Well, I'd say the things that we're seeing with regards to how is blockchain helping and bringing closer physical and supply chain is that it's there's from a bank's point of view, we're seeing there's good and bad things. The good things, as you said, Atul, is that blockchain is helping the bank in its internal processes to get those steps cheaper and faster and more assured by using blockchain. So internal process digitization is happening, and that's clear. But when you're then looking at the physical supply chain, with blockchain, we're seeing this shift from that linear supply chain, where it's from the manufacturing or the mining and the extraction, all the way through then to manufacturing, distribution, retail, consumption, and then destroying and the recycling of those products. In that linear process, banks are offering financing at various stages. If you're bringing the physical supply chain closer in a blockchain world, you're then in a matrix world. And that means everybody can see what everybody needs to, whoever they need to see from a DLT point of view. And what we're finding in some instances is that the financial supply chain, the supply chain financial offerings from a working capital perspective are more at risk, because now in a matrix supply chain, the buyers and the suppliers, crudely put, are beginning to use their own balance sheets from a working capital point of view, because there's more provenance and assurance within the supply chain and the movement of those goods. And then with smart contracts, the micro settlement between the parties as it goes from A to B, the buyer and the seller, is becoming more efficient. So banks, we're finding, are looking at, one, how do you remain within the flow? And then two, what new business models can you now offer because of this new environment that you're entering that's enabled with blockchain, i.e. more trust. So blockchain is bringing good things and opportunity, but with its challenges to provoke people within the supply chain to think about new business models. And that's the best part. I mean, that's 65% of my conversations is not the cost reductions. It's not the releasing of the capital and what do you do with it once you've got those costs down to remain competitive. And especially with COVID, we are in stressful times. But what form does that new capital take? And it's the pursuit of that that is the interesting part with blockchain platforms.
Awesome. Do you want to look at the crystal ball and tell me, I'll answer Sankar's question, which says that entire ecosystem is largely paper-based, and there is a problem getting to change that global trade ecosystem would be daunting. What timeline do you expect, 2025 or further down? I'll be dead, Sankar, by 2025, so it has to be earlier than that.
I think whatever the time frame is, let's have a look at why the paper-based systems are still in place. And we mentioned it earlier on, is the legal veracity of paper contracts in certain countries are at varying levels, because you need to have paper in certain countries and other ones have more veracity with digital signatures or digital contracts or with digital ID. So what we're seeing is institutions like the ICC and the WTO trying to force and move and motivate countries to be more digital in their legal system. So that's going to take time, but it will be happening faster as a result of COVID. As we said, digitization is not enough. You've got to change those laws as well, so everybody at the same level of veracity. But even if you did do that, the sharing of the data, which is the new oil, you still have this psychological challenge of asymmetrical data, which is, you know, I've got a network, I'm sharing data with Mark because he's trade finance, I'm sharing data with Guillem because he's the bank, and we're sharing it for the right reasons for the customer and for them to have a seamless experience to then hopefully get more business. But how do I know that even though I'm sharing data with Guillem and Mark, that they're not making more money than me from, or getting more value from that data? So that also needs to be overcome. And that's where we're seeing with the study, this notion of where's a natural neutral venue to convene so that everybody, no matter what platform they have, that they can share with trust, with the right governance in the absence of standards, and also in the absence of a global legal framework that has digital veracity equally around the world. So there's a little bit more to this than as to why companies haven't participated, because UCP 600, years old, EUCP issued a couple of years back, no mass adoption, but they're looking at it now. So it will accelerate. I think it will be sooner than what people thought.
I think somebody told me recently that COVID-19 has been an accelerator for digital adoption. You know, specifically in trade finance, supply chain. I think we can all, with 2025, I'll be honest, I don't think we're going to be fully digital end to end in all aspects by 2025. I know technology evolves and moves at such a pace, but also then we've got, and it moves much faster than regulation, legal compliance, and all of these. It's a case of trying to bring everybody together. And I think the big word that we've been using, or the general theme, has all been about collaborating. How do we actually get all of these bodies working together? How do we get banks, you know, at various levels of maturity in terms of digital adoption, you know, to be able to adopt all of this new technology or a more digital approach going forward? So do I think it'll be 2025? Don't quote me, but I don't think we'll be fully there by 2025. But I still think we will continue to accelerate, and you know, it's a journey, and we'll continue to go on that journey on towards, you know, full digitalization at some stage in the future. I do think that will be more digitally enabled by 2025. To what extent? I guess it's really all about how the adoption of our technologies and the new ways of working. And yeah, obviously COVID-19 is an accelerant, but I don't think it's gonna, you know, I don't think that after COVID-19, the only thing I think that we've discussed on our SIG before, we only hope that COVID-19 is not a temporary measure, and some of the guidelines and rules and regulations that have been put in place today regarding, you know, ICC's guidelines, for example, on e-signatures, where they're now accepted, that they become now the new standard, brought in by a pandemic and by chaos, but they become now a new standard, that we don't revert back to the older ways when things start to settle down after, you know, COVID-19 and the new ways of you know, the world opens up again completely. I think that, you know, whatever standards and whatever new standards, you know, are brought into place to allow a more digital, secure trade, more visible for all of the participants and whoever needs to see what information, that now stays, and we build upon it, that we don't take 2 steps forward and you know, and you know, 4 steps back, that we continue moving forward with digitizing.
Yeah. So Pam, it might be a good idea for your next survey or research paper to track down the world of trade and how much percentage of that is digital, and we kind of mark that, right? Because today there isn't a data point that I can refer to say how much it is and how much it has gone to, right? Because that's fundamentally very important for us as an industry to look at.
Yeah, I would say there though, Atul, from the study, what we did see was where people are today, what are the challenges they're facing going forward, and then some guidance, some insights as to where do they want to go. And where they are today, out of the study, 41% specific to blockchain actually said they're getting positive ROI. So what that means to us is that companies have started to play, experiment, learn and understand what is blockchain above and beyond digitization initiatives, whether it's the data gathering and the collection of data via OCR, or applying artificial intelligence to the workflows within institutions, as well as then working in the supply chain, etc. But 41%, they're getting positive returns in trade and trade finance with blockchain. So that shows that they're on the journey. 85% say they'll be working with more than 3 technologies in 3 years' time. So their adoption rate is looking over that horizon, because the study also shows that if they get the right adoption through better collaboration, to the point Gillian was mentioning earlier, we're finding from the study that 90% said that they expect a 1 to 10% GDP growth in the event of sharing data in a much trusted way for trade finance in trade. So companies in the study are seeing the upside, they're seeing the traction. I think it would be good to get more granular insights as to where and what, but I think the net takeaway from our point of view is that as a result of COVID, is look at all of your digitization initiatives, look at how you can optimize that intra-company with blockchain, and we're seeing that happening already. Home Depot do it with their own intra-reconciliations for disputes within its own company. Anything that's large, capital intensive within an organization, they're already looking at an intra-organizational value from blockchain in reducing the capital tied up and the processes and the information being shared in a much smarter way. So look at those projects now. See, can you accelerate value with blockchain? But by design, make sure that you're building in the ability to talk to other networks, because it's that network effect that we're looking to drive, which is not just grow your market share, but grow the size of the market too, which is what you get with the network effect. But how do you do that in a much more trusted way? So we're seeing that trajectory, we're seeing that trend, but for the people on the call, just go back and double check what you're doing and introduce this notion, because with Hyperledger, what we're seeing is if you're deploying in regulated industries, the private permissioning architecture of Hyperledger from an enterprise perspective does scale.
Exactly. All right. I know we have been going for now hour and 20 minutes, so I think maybe take a time to take a pause. If there's anything else, Andrea, you wanted to add in or comment before we can close off?
Oh, it's fine for me. It was very interesting. I didn't take the word. I mean, I just lashed the ground for you. It was a very interesting conversation, especially in terms of data sharing. I have been participating in some research in that specific field. So for me, it was very, very interesting conversation. It was very rewarding. So I thank you all of you for the speech. And for me, I send you back to the next Hyperledger appointment in 2 weeks from today.
Yeah, awesome. So I think, like Julian mentioned, we can cover some of these questions also.
Yeah, maybe for the next time. So would be good to link next meeting, Hyperledger Trade Financing, just to give a sort of continuation of our discussion. And of course, with all of you, would be glad to go deeper into this.
Awesome. All right. Any final thoughts, Julian?
I just thank you. Wow, that was an amazing event.
Yeah.
Mark, that was amazing. Thank you very much. And yeah, let's further collaborate. Wonderful. Thank you.
Yeah.
Take care, everybody.
Thank you so much, everyone. Thank you, Guillaume. Thank you.
Thanks, Guillaume. Thanks, Julian.
Have a nice day.
Thank you, guys. Bye-bye.
Bye, Guillaume.
Cheers.
Bye, Pam.